Imagine you're watching the first rays of sunlight break over a quiet horizon. That feeling of renewal, of new potential. That's where we are in the world of cryptocurrency right now. The market is slowly waking up after a long winter, and investors are looking ahead to what could be the next massive bull run in 2025 and 2026. The big question is, which cryptocurrencies will lead this next wave? In this video, we're diving deep into 10 of the most promising coins and projects shaping the future of digital finance. From the trusted giants like Bitcoin and Ethereum to emerging networks building the next generation of blockchain infrastructure, we'll break down why these assets matter, their potential, and the risks to keep in mind. Let's start with the cornerstone of it all, Bitcoin. The original, the leader, and still the most important digital asset in the market. Every bull run begins and ends with Bitcoin. Analysts expect that in 2025, we could see major institutional investors re-enter the space through Bitcoin ETFs and spot products, driving liquidity and legitimacy. Some predictions even see Bitcoin breaking past its previous all-time high and possibly heading into six-figure territory if momentum continues. Bitcoin's value proposition is clear. It's scarce, decentralized, and viewed as digital gold in an era of inflation and uncertainty. The risk, of course, lies in regulation and sentiment. But one thing's certain, Bitcoin remains the foundation of any crypto portfolio, a stable pillar in an often chaotic market. Then comes Ethereum, the heart and soul of decentralized applications. Ethereum isn't just a coin, it's a global computing platform powering smart contracts, decentralized finance, NFTs, and an entire ecosystem of innovation. Standard Chartered recently raised its price target for ETH to around $7,500 by 2025, reflecting renewed confidence in the network's potential. With its ongoing upgrades like sharding and rollups, Ethereum is becoming faster, more scalable, and cheaper to use. Still, competition from newer, high-performance blockchains is intense, and gas fees remain a constant struggle. Yet, the sheer number of developers, projects, and institutions building on Ethereum ensures that it remains the primary engine of crypto innovation. A must-have for anyone serious about this space. Speaking of competition, Solana is the next big contender. Once criticized for its network outages, Solana has come roaring back with major ecosystem growth and impressive speed. Its ability to process thousands of transactions per second with minimal fees makes it ideal for high-traffic applications like gaming, NFTs, and DeFi. Many investors see Solana as Ethereum's fastest rival, an agile, performance-driven network that's capturing real user adoption. The community is vibrant, the developer base is expanding, and projects built on Solana are gaining serious traction. The challenge, however, remains stability and decentralization. If Solana can maintain uptime and continue scaling its ecosystem, it's well-positioned to be one of the biggest winners of the 2025 to 2026 bull run. Next up is Polkadot, a project that often flies under the radar but has quietly built one of the most technically impressive ecosystems in crypto. Polkadot's unique parachain architecture allows different blockchains to work together seamlessly, something the industry desperately needs. As interoperability becomes the next frontier, Polkadot is building the infrastructure for a multi-chain world. Its approach lets developers create specialized blockchains for finance, gaming, or privacy while still being connected to the broader network. However, that complexity can also be a weakness. Coordination across multiple chains isn't easy, and competition from other interoperability players like Cosmos is real. But for investors who believe in the long-term future of connected blockchains, Polkadot remains a strong infrastructure-level play. Avalanche deserves a mention right alongside it. Like Polkadot, Avalanche is all about scalability, but with its own flavor. It uses a unique consensus protocol and subnet system that lets developers build customized blockchain environments tailored for their own applications. This flexibility has drawn projects from DeFi, enterprise, and even real-world asset tokenization. AVAX has had its ups and downs, but its fundamentals remain solid, and forecasts suggest renewed interest heading into 2025. The key to Avalanche's success will be attracting users and liquidity across its subnets. If that happens, AVAX could easily surge as the market recognizes its potential as both a scalable and customizable blockchain solution. Now let's talk about XRP, one of the most polarizing coins in crypto. Despite years of legal battles with the SEC, Ripple, the company behind XRP, continues to push forward with its vision of a fast, low-cost global payments network. Many see XRP as a bet on traditional finance integrating with crypto. If Ripple gains regulatory clarity and expands its partnerships with banks and payment processors, XRP could see significant upside. Some projections place it between $1.80 and $4 by 2025, depending on how the court and regulatory landscape evolve. Still, XRP carries more uncertainty than most coins on this list. It's a high-risk, high-reward play, not for the faint of heart, but potentially rewarding for those who believe in crypto's role in international finance. Chainlink is another name that might not be as flashy as the big Layer 1 blockchains, but plays a crucial role in the ecosystem. It's the backbone of blockchain data, connecting smart contracts to real-world information through secure oracles. Without Chainlink, many DeFi protocols and stablecoins simply wouldn't function. As decentralized finance and real-world asset tokenization grow, so too does the need for reliable data feeds. And Chainlink sits right in the middle of that demand. The beauty of Link is that it benefits from the success of other projects, acting as essential infrastructure. While it faces competition from other Oracle networks, its first-mover advantage and strong partnerships keep it at the top of the game. Cardano comes next, a project known for its slow, methodical approach. Founded on peer-reviewed research and academic rigor, Cardano's development may not move as fast as its competitors, but it's built with precision and long-term security in mind. Its focus on governance, sustainability, and smart contract reliability appeals to those who prefer measured progress over hype. Forecasts for ADA vary widely, from modest gains to possible doubling or tripling by 2025. The network's real challenge is speed, both in terms of adoption and perception. But if it can translate its strong research foundation into real-world usage, Cardano could surprise many in the coming years. For investors looking for the next breakout Layer 1, Sui is worth watching. It's a newer blockchain that's been gaining traction for its lightning-fast performance and unique data model. Projects like Sui represent the cutting edge of blockchain design, building for speed, scalability, and mainstream user experience. Many analysts have set optimistic targets for Sui's price by 2026, assuming adoption continues to rise. But with high potential comes high risk. Newer chains face constant pressure to attract developers and users, and the competition is brutal. Still, if Sui or similar next-generation chains deliver on their promises, they could become the Solanas or Avalanches of the next cycle, multiplying early investments dramatically. And finally, we can't ignore the wildcards, the meme and viral tokens. Projects like Shib, Pepe, and the newer Lil Pepe show how community-driven hype can sometimes outperform fundamentals in crypto. These coins are fueled by narrative, culture, and momentum. Some of them evolve beyond pure memes, adding layers of real utility or community governance, but they remain extremely volatile. In the right bull market conditions, however, meme tokens can experience astronomical gains. The key is timing and risk management. Treat them as speculative plays, not portfolio staples. A small position can go a long way, but overexposure can lead to quick losses if sentiment turns. Before we wrap up, a few golden rules for navigating the bull run. First, diversification is everything. Don't pour all your funds into one or two coins. Spread across a mix of core assets like Bitcoin and Ethereum, infrastructure plays like Solana and Avalanche, and a couple of high-risk bets like Sui or meme coins. Second, always do your own research. Follow project updates, read white papers, and stay tuned to credible news sources. Third, set both take-profit and stop-loss levels. The crypto market moves fast, and emotions can be costly. Fourth, time your entries wisely. Sometimes waiting for corrections or dips can make all the difference. And finally, only invest what you can afford to lose. The upside potential is massive, but so is the volatility. A well-balanced crypto portfolio for 2025 might look something like this. Around 40 to 50% in stable anchors like Bitcoin and Ethereum, another 30 to 40% in growth and infrastructure projects such as Solana, Polkadot, Avalanche, Chainlink, and Cardano, and the remaining 10 to 20% in speculative, high-risk tokens like Sui or Lil Pepe. That balance allows you to capture upside potential while minimizing catastrophic losses if one sector falters. If you found this guide helpful, make sure to like, share, and subscribe for more deep dives into crypto's most promising projects. In future videos, we'll be exploring detailed breakdowns of individual coins, from Solana's real-world adoption to Ethereum's evolving roadmap.